Hello, everyone. Happy Tuesday. Thank you so much for joining us for today's webinar, Take Control of Your Cash with Comprehensive Cash Management, a guide for Oracle NetSuite customers. As we wait for everyone to join over the next few minutes, please feel free to use the chat and share with us where you're zooming in from. I'm Devin Clark. I'm Centime's Director of Demand Generation, and I am joining you today from Boston, Massachusetts. So before we begin, I just want to go over a few housekeeping notes. Number one, we are recording. So if you're curious to go back and rewatch any part of this webinar, we will be sharing that on-demand recording with you via email within the next day or so. Second, please engage with the polls. It gives our speakers an understanding of who you are today and really just helps guide the conversation. Additionally, if you signed up through CPA Academy, you are required to answer at least 3 polls for the 60-minute webinar to be able to get credit. So we will have 7 polls throughout the duration of the webinar. Each poll will contain 1 question, which you'll need to scroll down and make sure to submit your answer for. We'll keep each poll up for as long as possible to give you enough time to answer. So until we need to launch the next one, we'll have them up. Each poll will be titled like poll number 1, 2, 3, and so on out of 7. So you always know what poll number we're on. We are also on chat and Q&A, so I encourage you to mingle and submit any questions you have for our speakers through the Q&A feature on Zoom. And our team today will do our very best to answer questions in real time or at the end of the session. So with that, I'm pleased to introduce you to our speakers today. We have BC Krishna, CEO and founder of Centime, and also Griffin Ortale, director and the sales at Centime. So BC, if you want to kick us off with a little bit about who you are.
Hey, thanks, Devin. Hello, and hello from Omaha, Nebraska, where I am traveling and in a very nice conference room, hermetically sealed. And it's in 79 degrees and gorgeous here, and also very flat. You can see for miles and miles and miles. And so look forward to spending some time with you. I'm the CEO and founder of Centime. I've been here for a few years, and I look forward to being your co-host today.
Yeah, Griffin Ortale, Director of Sales here with Centime. Excited to take you all through the Centime solution in a little bit. And I am dialing in from beautiful Metro Detroit, Michigan today.
Awesome. So scattered all over the US today. So with that, BC is going to kick us off on why optimizing cash flow really matters today. Griff is going to share how you can supercharge your cash management strategy. And at the end of the session, we'll dive into any questions you may have that still are lingering away. So with that, I will stop sharing my screen. So BC, you can dive into your introduction.
All right. Well, again, thanks so much. And, and we can answer questions along the way at the end, or, completely digress and talk about topics that are completely irrelevant, to the topic of conversation today. Just kidding. The obvious point here is we all know that cash is the lifeblood of the enterprise. It is the fuel that feeds the fire. You cannot, really exist, survive, or grow without, some degree of cash. Needless to say, cash is something that needs to be managed very well. At the same time, there are lots of things that happen in a business, that cause some degree of risk and uncertainty that impact cash and cash flow. Again, but as obvious a statement as anyone can make. There are risks and uncertainties that are specific to the businesses that you're part of and run. And of course, those are very unique to things that happen in your business. But there are also risks and uncertainties that are more, I'll say, atmospheric, environmental, macroeconomic, that I think are also things that, to some extent give us a greater degree of anxiety because we, generally speaking, have less control over them. But it is important for us to understand them because even if we don't control them, having an awareness of what they are is really, really important and highlights, once again, the need to be able to control and manage cash. These are 4 things that I think are on people's minds today from a macroeconomic standpoint. Where is the economy headed? Have we actually ridden out this inflationary period we're in? And if we did, Did we write it out only to face a recession, which is the correcting on the other side? Don't know, right? But it's something that is a latent existential angst that everybody has. What is going to happen with interest rates? Of course, interest rates are important. Lower interest rates drive growth in the economy. Higher interest rates depress them. But there's sort of this anxiety once again that we have where, oh, interest rates are going up, they're going down, we don't really know. But I'll go into this a little bit more. But the newsflash, of course, is that the days of near zero interest rates are over. The third question is there a credit crunch coming? What can we know about the signs in the economy, the interest rates, the Fed's approach to controlling it that then has a downstream impact on the credit facilities that we often lean on and need. We'll talk some about that. And then finally, certainly, once again, in 2008, we had a banking crisis, and you'd think that just when it was safe to come out, well, guess what? In March, we had another huge, massive banking crisis in the form of Silicon Valley Bank failures and so forth. That, I think, is still playing out. We don't really know how that's going to happen, but one thing is clear, that the banking industry is still going through a lot of uncertainty. And banks are central to how we manage cash and credit. And so we just need to make sure that we are aware of the sort of uncertainties there. We've got this huge, massive, student loan, that's amount that's out there. And again, lots of policy issues associated with student loans that we need to worry about. And if you kind of are following how banks are managing their banks, of course, as thrive on bringing deposits in. It's the deposits that allow them to lend. And when their deposits fall, their lending ceases, their instability increases. And so banks will often do what they call, brokered deposits. They'll basically buy deposits from large cash managers like Fidelity and Morgan Stanley. But these are all expensive and they have high flight risk associated with them, unlike retail deposits. But if you look at the Wall Street Journal articles, you'll see that some banks are more exposed to hot deposits than others. And it's something that, is worth, keeping track of. So these are uncertainties that, we all face. And I want to just really dig into this in a little bit more detail before we then talk about what we do about them. So first of all, what's going to happen with interest rates, right? Newsflash, as I said, interest rates are not going to go back to being zero. This is a chart from the Federal Reserve Bank that plots the interest rates since 1955, about 75 years. And you can see, only in the last 15 years, right, from the banking crisis in 2008 through to the end of COVID, have we seen interest rates near zero. And the argument, of course, is that interest rates needed to be held near zero in order to ensure that the economy didn't completely crater. And so we are coming out of that. And if the history is any indication, it should be pretty obvious that we'll never really go back to the point where the last 15 years interest rates have been held near zero. And for those of us that have graduated during this period and have entered the system and have been part of the banking environment, the finance function and the working, have had jobs in the last 15 years or so, it's almost like a half a generation has never really experienced what normal interest rates look like. But the fact is that it's extremely unlikely that we'll ever go back to an interest rate environment which is being held near zero. It's an impact. Credit matters, right? I mean, I'm going to share with you another wonderful study that's done by the Federal Reserve Bank every year. And I'm going to pick two slices of that survey. The first is taken through 2019. And the reason I sort of cut it off at 2019 is because 2020 was a little bit of an anomaly with COVID hitting us. You can see that 2 points I wanted to highlight is that banks routinely borrow. And about 40% of all businesses borrow, and you can see why they borrow. Most of the time they borrow to expand the business, to pursue new opportunities, and to acquire business assets. In other words, to meet growth, right? They certainly borrow to meet operating expenses as well. But by and large, it's always a progressive, hopeful, optimistic reason why businesses borrow. But something changed, right? The credit picture has not been pretty since the Fed raised interest rates, the bank failures, and certainly the crypto meltdown has all sort of impacted the credit picture. And so actually if you now include COVID, which is sort of this 2020 survey, and then and then look at what happened in 2021, you can see, like, instead of 40% of businesses borrowing, something like 36% fewer, which is a very meaningful number, but 34% of businesses now routinely apply for credit. And that's not the whole story. The real story is that while fewer businesses apply for credit, the reason they apply is to meet operating expenses. This whole picture is flipped. It used to be that most of the time businesses borrowed to grow, but that number is now like it's all a full 20% difference between why they borrow in terms of meeting operating expenses versus expanding the business. It's a kind of a really interesting perspective on like why businesses are borrowing is just to survive, is to manage their cash and cash flow, to live to fight another day. It's a different picture than the picture that we had in 2019. The third point I want to say is that banks certainly face significant amount of disruption these days, and I want to just really highlight that as well. We are obviously in the wake of the Silicon Valley Bank crisis from 2009 to 2012, and that is during the first banking crisis, 440 banks failed. That's a lot. WaMu, Washington Mutual was the one that we heard about a lot, and more recently it's been Signature Bank, Silicon Valley Bank, First Republic, and a couple of others. But if you look at the overall picture in the last 25 years, again based on Fed data, it's about 13% of all banks have failed. It's a very big number, 4,300 banks. I'm not including credit unions and savings and loans in this. It's only the sort of the banks, the commercial banks in the country. 560 banks, about 13% of all banks. That's one picture. The other picture here is that about $786 billion in deposits have been impacted, right? So if you're a business that had your money in one of those sort of 560 banks, your deposits count towards the 786. Needless to say, because we are now completely aware of the fact that the FDIC limits are only up to $250,000, any business that had more than $250,000 in deposits would be challenged. Just to put it into perspective, if you average the $786 billion over the 23-year period that this represents, it's about $33 billion in deposits every year that's impacted. And again, to put it into perspective, that's 6 times the amount of fraud that occurs in the payments sector today. So for all the noise we make about fraud, it turns out that there's more risk associated with banking than there is with fraud. And then failures aside, what we're seeing is the stuff that's above the waterline. There's a whole bunch of stuff that's below the waterline. And these are the types of risks that I alluded to earlier. What's going to happen with savings and loan? What's going to happen with hot deposits? What are the types of risks that banks take today that we don't know about? We have a tendency to trust banking, and we should. There's no reason at some level not to. But at the same time, every one of us should be in the business of ensuring that we mitigate the risks that we see in the system. Risks are inherent. And then finally, the point is that, failures and risks aside, the banking industry is sort of very dynamic. When you have 4,600 banks, there's going to be a lot of M&A. Big banks buy small banks, branches change hands, and all of that results in brands, relationships, and banking products being disrupted. So as you can see, once again, from Federal Reserve Bank data, just in 2 years, 570 M&A transactions took place where $5.3 trillion in assets changed hands. So stuff happens, right? And these are the reasons why we really need to do something about ensuring that we have control over cash and cash flow. As my mother always told me to focus on that I can control, right? I mean, we can't control what's going to happen to inflation. We can't control what's going to happen with interest rates or with the banking sector. But, when I go to work every day, there are half a dozen things that I can do every day, to really kind of gain control over cash and cash flow. So what I want to do is the next sort of, few minutes before I hand it off to Griff is to highlight 6 concrete things that businesses do and can do, should do, probably do already, even if they don't recognize it formally, to control and manage cash flow. I want to highlight these things. And then Griff, what he'll do is to take us through how that can be done in a very concrete fashion, certainly through the context of the Centime product. This is, of course, again, I want to say that we're using the Centime product as context, as a way to give you insights into how you can do this. Certainly, I mean, just use that as context, right? I mean, even if you, use this as a framework to run yourself using other solutions that you have and use, that's great. But we just wanted to share with you how it can be done using our product. So 6 things that you can and should do to control cash, right? So number 1 is the most obvious. Once again, you probably do this. Always know how much cash you have. We did a survey recently. We suggested that, a typical business, maybe using NetSuite, a mid-market company, has something like, 3 to 5 banking relationships. And that means that your cash is distributed across those different relationships. And at any given point in time, if you want to know how much cash you have, it's important to be able to aggregate that cash, to know where the cash lies. So you do this today, but do you do it routinely? Do you do it all the time? Does everybody with the business have visibility into it? But then the question also is, what is the source of truth? You can look in your bank account to understand your liquidity. You can look in your general ledger to look at, how your cash is recorded there. But the reality is that most businesses don't reconcile their bank account with their general ledger on a minute-to-minute basis, on a daily basis. They probably do a month-end close. And so it's important to look at both your GL as well as your bank account to have a true picture, because one might, reflect, the bank account might reflect payments received and not yet posted, whereas your general ledger might reflect payments made but not yet cleared. And so having a picture that looks at both of them is important to have a more accurate view into things. If you build an aggregate picture of your cash and balances, the second part of it is to actually protect your cash balances. This once again comes back to making sure that it's the nest egg, right? How do you ensure that you ward off bank failures? Certainly one approach, especially in the context of what has happened with Silicon Valley Bank, is to diversify your deposits. Are you willing to place your business at risk? Because it turns out that the cash that you have in your bank account is protected to the tune of $250,000 and no more. But diversifying our deposits can help. And it's only natural that you would do that. As consumers, we sometimes diversify any savings we have across different investment vehicles. You don't put all your eggs in one basket. In the same way, it's unwise to put all of your eggs in one basket, no matter how good you think the bank is that you work with. Fraud is inherent. It's existential. How do we ensure that, that sort of protection is maintained against payment fraud? Then we get into a little bit more of the operational everyday elements. In as much as you know how much cash you have now, how is that cash going to play out over the next 13 weeks? I'm not talking about a long-term planning horizon. I'm just really talking about the operational window, of the next quarter. What is the timing of payables and receivables? How does that impact cash? So you might have a receivable that's due next week, but payroll due tomorrow. How do you sort of reconcile the timing issues associated with that? In other words, how do you smooth out the cash flows? Well, having an accurate view into your cash flow forecast can help you make that happen. But in as much as the cash flow forecast is important, it's still only a means to an end. My belief is that most businesses use 3 levers to actually control their cash and cash flow. And I want to highlight that once again to put it into very formal context. Number 1 is everybody makes payments to suppliers, right? And automating AP is about making sure that you have, efficiency, cost reduction, and certainly better controls on your AP process. But AP is also about managing working capital. When you pay somebody, you deplete your working capital. Depleting working capital has an impact on cash. But many businesses informally ask this question of who should I pay? When should I pay them? How much of that open payable should I pay? And how should I pay from my source of liquidity? Should I pay from a credit line? Should I use a credit card? These 4 questions about who do I pay, when do I pay, how much do I pay, and how I pay all have an impact on cash. And that has a very, very important, and AP is a central player in stretching days payables outstanding to impact working capital. It's pretty obvious, but I think it's important to place to highlight the importance of AP in managing cash. AP certainly has a responsibility to pay suppliers, but AP equally importantly and strategically is about impacting your working capital. The flip side of it is accounts receivable. Many businesses simply follow up with their customers after the due date, which is the only way they can do it because it's not automated. But what we've found is that businesses can routinely have a massive impact on their working capital and their cash by reminding customers to pay before the due date. And doing that at scale. If I have like 100 customers, I'm not going to be able to send individual emails out to every one of those 100 customers as soon as I send invoices out. But if I can have some way to automate the reminders, to them and do so in a very gentle way, 10, 15 days before the due date, if I'm giving them 30-day payment terms, that actually has a huge impact on your days sales outstanding and the impact on working capital. And then finally, the point is that, if you're a business where you've gotten great visibility into your cash and cash flow through forecasting, wonderful control over AP and AR, you're doing the best you can, but it still might be the case that for a variety of reasons, you might need access to credit. There are times when you want to have a certain balance posted at the end of the quarter. It might be that you have some insight into some uncertainties, whether it's your customers or the business environment. It's always a good idea to have an insurance policy and a credit line so that you can write out these cash values. So again, most of you probably do these kinds of things, but I think the question is, how do you do it? And how do I bring this together so that I can do this more efficiently? So these 6 things are what I believe, as a business, as a person who's run a business for 4 businesses over the last sort of 15 years. And as I talk to customers, we've sort of synthesized these as the most important things to focus on in order to be able to control cash and cash flow. So with that as backdrop, the question, of course, is, if I'm using NetSuite, can I do this? And certainly our perspective is that Centime can help you do that. And so what I want to do is to turn it over to you, Griff, so that you can walk us through how it can be done.
Yeah, thanks a ton, BC. I will take over the screen share here. I think you might have to disable yours first.
Oh, yeah.
Perfect. And one thing I want to call out before we just dive right into the Centime demo here is that we are an embedded solution directly inside of NetSuite. So everything that we're going to look at today would not require you folks to leave NetSuite at all. We are native plug and play with almost no IT involvement in order to get up and running here. So wanted to touch on that first. And then I think just based off kind of the 6 big things that BC had just mentioned, which we will address all of them, I think we should just start at the top here with, number 1 being, how much cash you have, which would be found here in this monitor cash and forecast cash flows module.
Yeah. So is it okay if I kind of, walk you through this along with your help, Griff?
Please do.
Yeah. So what you see here on the left is a little sunburst diagram that basically is an aggregated view into all of your cash assets and cash liabilities across your different banking relationships. And on the right-hand side, what we have done is, really you can see a little button below that says connect accounts. We won't do it here, but in effect, just like you can do with Mint, what you can do is to click that button, enter your online banking credentials, and the result of entering your online banking credentials, what we can start to do is to pull in your transactions and balances. And if you can click that one of the plus buttons, the checking account, you can see basically if you have multiple checking accounts, you would see those balances right here. The other thing that I want to just really highlight here is the column that says balance is your bank balance. And as I said, your bank balance and your general ledger balance might be different, right? For the reason that on the accounts receivable side, you might receive cash that's not been posted. And on the accounts payable side, you may have made payments that have not yet cleared. And so having that gives you a truly comprehensive picture as to what's going on in your bank balance as well as your GL balance. It's an aggregated picture. And if you scroll down, you can also see not just the bank accounts, you can also see all of your credit and loan accounts, all pulled together in one place to neatly summarize. And again, all of this is done in near real time. We actually pull in all of these things in the morning when most banks post their update their balances. So as of 5 a.m. this morning, you'll see like the most current data.
Awesome.
Go ahead.
No,
The other thing that, yeah, sorry, go ahead, please.
No, I was just going to take it into the forecasting, but keep going.
Well, we do have a question coming in from the audience, if you don't mind. One is asking, does it pull international bank accounts?
Not currently. We are not currently pulling in international bank accounts, but certainly looking into how we can make that happen. As you can imagine, we get a lot of that question comes up a lot for us, and something that we're looking into. While we're on the questions, somebody else is also making the point that we're missing on inventory. Absolutely, 100%. Inventory is an important element of how you control cash, no question about it. Just in the interest of sort of broad strokes, I think we just focused on these 6 things, which pretty much apply to everybody. And there's some questions about polls here, Devin.
Yes, we just launched the 3rd poll, so please feel free to answer that.
Okay.
And if anyone's having trouble with polls, you can email me at devin@centime.com, and we can solve those issues after the live webinar.
Awesome. So that while we're on this business about cash, I mentioned the first 2 items about controlling and managing cash is 1, know how much cash you have. The second is to ensure that you protect your cash. And protecting your cash is at least 2 things. It's about protecting your cash against unforeseen things that happen with the bank, and protecting your cash against fraudulent activities that you might become subject to. So if you kind of look at this thing that says Centime Checking Plus, so I'll talk about this in just a second. But one way to protect your cash against potential bank failures is to diversify. You might have a couple $1 million in your bank account, and you might be concerned about even if you're not concerned about the bank, I would say that it's a best practice to ensure that you do some diversification. And so you might say, look, I want to sort of park $500,000 at one bank and another $500,000 at another bank, and sort of keep about $1 million in my operating account so that I can sort of, limit my risk to that. But how do you do that? How do you ensure that you keep moving money around? There's account-to-account transfer issues, there's reconciliation issues, and so forth that you have to worry about. And what we have done is actually to create a checking account product that we work with a bank on, which basically is supports automated diversification. So what we do is we have the ability to actually, this is at a federally insured institution, and we partner with a bank called the First National Bank of Omaha. So you can, within this interface, transfer your money from, let's say, one of the banks that you've connected to. Go ahead, click on that button, and into the Centime Checking Plus. And what we will do behind the scenes is to diversify that into a network of about 3,000 FDIC insured banks to effectively raise the limit from $250,000 to $130 million. It's a very big deal to be able to now have one place where you can park your money and diversify that base to a much, much, much higher level. Not to mention the fact that, again, we don't have time to go into this all that here, is that we also provide a higher yield on this account. It looks like money market type yield, but it has full liquidity with no restrictions on the number of transactions that you perform. So that's the idea of supporting the first 2 items that I mentioned, which is how much cash do I have now, and how do I diversify that cash, without essentially kind of, having to do it myself. So yeah, I mean, I think the question is, don't banks have this feature? Some banks do. And the question is, what is the yield associated with it? How much liquidity do you have? Banks have restrictions, right? Sometimes they'll say, yes, I can do this, but you can have 6 transactions. So the point is that no matter who you bank with, we have this ability. So in other words, you don't have to give up your existing operating account. You park the money here, and no matter who you bank with, you can get the benefits of this or diversification. So the third part, which I'll turn over to Griff now to run with, is now that I know how much cash I have and how I have it protected, now how is it going to behave over the next 13 weeks?
Yep, exactly. And great segue. And just as important as cash today is cash 13 weeks from now, like you just mentioned. And what we are looking at here is Centime's ability to take in historical information from your currently existing NetSuite, leverage it through some machine learning and AI to help project what cash flow is going to look like 13 weeks from now. So there's kind of 4 key elements taken into consideration here within this forecast, being open AR versus open AP, along with expected dates. So if we understand that you have a customer that historically pays you 20 days past due and you issue them a bill due tomorrow, we're going to project that to come in 20 days past tomorrow, for example. So different types of things are being calculated, not just AR versus AP due dates. Another element is going to be predicted AR and AP. So if we, again, see historically you pay a vendor X $1,000 a month, we're going to continue to project that out over the next handful of months. Another important element is non-invoiced inflows or outflows. Payroll is a good example of this. You know, you're not creating an invoice for yourself and paying it out, but we need to account for that. And then lastly is your ability to model out what if scenarios and understand the impact of X, Y, and Z before it actually happens, to understand if your cash flow is in a good enough of a position to go ahead and make that investment in Q1 versus Q4, for example. So those are kind of a combination of all of that is what we're looking at here from a 13-week forecast. And I can drill into any given week to understand where these inflows and outflows are expected to come in from or go out to, and use this as a map to guide my inflow versus outflow strategy and kind of put on my crane operator hat, to which we'll look at here in a little bit of how to actually do it, but move outflows out, see what I can do to move certain inflows in, and make sure that I know what's going to happen before it does, so I can get in front of it and make those changes. The next best view here within the forecast would be the table view, where I can come in here and we actually have the ability to create cash flow groups. So you're able to assign certain inflows to groups as well as certain outflows. So I can report at the group level. Another example of this could be like, you know, my SMB market, my mid-market customers, SMB customers, enterprise customers, et cetera, where I then have a fold down so I can report at the individual inflow and outflow, as well as that group level. This information could be exported as well. And if I jump into any given inflow or outflow, the visual interface experience here is going to be consistent across the board. It'll let me know, which inflow or outflow I had drilled into. And the real purpose of this is I can sit here and say, okay, it looks like I process payroll about every other week at $35,000 each payroll run. But if I know that we've budgeted and we're planning to hire 3 new people starting in November, I can come in here and tell the system, hey, I know more than you. I know that our payroll starting in November is going to increase to around $40,000, and get ahead of that and punch in those transactions to see the impact it's going to make to my cash flow, as well as being able to model out brand new transactions that have never even taken place before, such as, hey, this vendor we work with came out with an awesome product that's really going to help us. It'll be another $10,000 a month. Let me punch this in, see if it's something I can afford, maybe create a what if scenario, export that out, save it. Whatever you want to do here is totally up to you, where you're making sure that you are understanding the impact of X, Y, and Z before it actually takes place. And then lastly, also able to create new inflows and outflows that don't necessarily live in NetSuite today. So it's not fully dependent on this vendor or this customer already living. If we want to do business with a vendor we've never done with before, I can go ahead and punch those different transactions in as well and see the impact that they're going to make on my cash flow. So happy to dive in that further with anyone after this webinar here, if there's any specific niche questions around forecasting, or get a demo set up specifically for you all. But as I mentioned, they're kind of using that forecast as a map to make changes to inflow versus outflow management. Here at Centime, we actually have the tools to allow you to actually adjust those inflows and outflows directly within the same interface, again, without ever needing to leave NetSuite. So, when we think of inflow versus outflow, it boils down to pretty basically being AP versus AR. Within our application here, Where I'm going to jump to in a way to obviously stretch out your cash flow would be stretching out AP. So we want to give you the full tools to automate that end-to-end payables journey, which is what we're going to look at here. So when I jump into the payables module, first thing I want to touch on is just the general visibility and flexibility I have here to see the information about my vendors and my invoices in real time, the way that I want to see it. So I can choose which columns are showing, size that they're in, order that they're in. I can filter by pretty much anything I want on here to get me particular views based off my open invoices, my suppliers, etc., and keep all communication history and historical actions that have taken place with this vendor all in one central spot. So I have a full audit trail of every approval that's been made, every invoice that's been paid, etc. Where the AP automation journey actually begins is going to be here in this documents tab. So how it works is we would be integrated into the email address that you folks are already receiving bills today. As soon as you receive a bill, we would bring that in to our system automatically, use OCR technology to map over the information that's presented on the bill to where it needs to go within NetSuite. We're looking at a pretty basic example here, but if we did have, multiple line items that needed to go to different places within NetSuite, different item codes, job, department, class, location, etc., able to filter that and ensure that the information is being put in the right spot within NetSuite. And then the next step here is sending this invoice on an approval journey and making sure that we obtain all the necessary approvals before this bill actually gets posted back to NetSuite as an invoice. So you can create as many different approval policies that fit your folks' needs. Here's an example of, a handful that are created where you can really weed out which types of invoices from which vendors need to get approved by certain people within your organization. And then once we do receive approval, we're going to go ahead and post that bill for you back to NetSuite, taking out any of the manual effort, saving you a lot of time and money throughout that process. And then the next step of the journey, once that document that you received becomes an official bill, is to pay that out. And this is where we really help blend cash flow with AP, as we view those together kind of tied at the hip, making sure that the right controls are in place to ensure, like BC mentioned, that you're paying the right people at the right time with the right payment method, keeping cash flow top of mind. So if I jump in here, these are all the open invoices that I have yet to pay out to my given vendors. I can choose a preferred payment method for each supplier that I work with today, typically how they accept payment from me. Whether it's ACH from whatever bank account, again, that you had loaded in earlier in the demo here, checks where we're actually physically sending the check to the vendor on your behalf, and then our own virtual card here, which gets you between 26 to 56 days of float as well as cash back. So being able to treat this as kind of like the way you or I use our consumer cards in terms of gaining float and not actually having that cash leave the business until a statement cycle after this is a huge advantage that a lot of our customers are taking advantage of. And then also that same type of rundown of all history and notes. But what would happen next is actually going to schedule a payment to be made on any particular invoice. So if I come down here and I see, this this payment here, I'm actually going to switch it to a check quickly, or not. I'm actually going to switch their payment method to a check just to show you all. Okay. Well, what's going to happen here is, and I have one scheduled. So let's say we took this $1,750 invoice for TYR and schedule it to be paid September 22nd. So this Friday via check, because that's the way that they typically get paid. If I did want to switch this on a one-off basis, I easily could press check and switch it from a different bank account or switch to ACH, but they typically pay checks. So that's going to be the default, or we typically pay them via check. Where Centime's really advantage here from an AP perspective is I have the ability to switch this view from just the standard aging over to what we call a cash impact view, where I can actually see the impact that making the payment that I had just scheduled on the 22nd is going to take to my cash flow, taking into consideration every other payment that we're expected to get in, every other payment that needs to go out, payroll, rent, everything in the full picture coming in here. So as I'm penciling in payments to be made, let's take this ACH, for example. and put it to the 22nd as well. Maybe that's a big payment run day we have. I can come up here and see the impact that that actually make, where this light purple is where my cash flow was without this payment in consideration. The dark purple is now where my cash flow is going to be if I do make this payment at this day. And for example, if I were to schedule one with credit card, my cash wouldn't move because it knows that that's not actually out of my bank for another 30 to 60 days from now. So helping blend cash flow and AP together, we've seen make a huge impact for our customers with being able to stretch out AP and ensure that they're making the right decisions. And then also getting full controls and audit trails in places. There's a whole nother separate approval journey here on the payment side, where we want to make sure that everyone that needs to approve an invoice before it's sent is doing so. And then once the invoice has been paid, we will reconcile with NetSuite as well, make sure everything is tidy there. And then the last piece of our AP automation is getting insight and visibility into what's happened historically, so we can use not just our gut feeling, but actual data to drive decision making. So if I jump in here to KPIs, we do offer KPIs on all three levels between cash flow, receivables, and right now for this conversation, payables, where I could customize this time range to view what's happened over X period of time. I have my high level portfolio metrics that are very important, DPO, turnover ratio, et cetera. And then I can get actual KPIs per supplier. So if I see here, for example, APS Tech, looks like I do the most business with them from a supplier perspective. They're issuing me net 30 terms. Why have I been paying them in 5.5 days? Like, we need to hang on to that cash a little bit tighter. And a lot of teams simply just don't have the access to these KPIs super quickly to understand and get that visibility to then drive our decision making and stretch this AP out a little bit further. And ultimately within the same system that stretching out would actually happen. So we want to arm you with everything at your disposal to get visibility, automate day to day, and ultimately improve cash flow from an AP perspective. Awesome. And then the other side of the coin here, as we want to stretch AP, we also want to shrink DSO and bring cash in the door much easier and faster than we do today. So that's where our receivables module comes in play, where when I jumped in here, there's kind of three main themes from our AR automation. The first is going to be visibility, where typically teams that we work with, before using Centime are working out of Excel, NetSuite, their inbox, their sticky notes, just no systems that were ultimately dedicated for AR and collections. We want to bring all that in one central location and automate as much as we can to help save time, effort, and then ultimately bring cash in the door much quicker. So same type of approach with AP that we saw. I can customize these views. I can change the size and order. I can jump into a customer to view all that we've done to collect from them over our relationship, any notes made on the account, exactly who on my team made the note, when the note was added. So if I am doing any research on an account, I have a full audit trail of basically everything that's taken place from our relationship with this customer. Same type of flexibility on the invoice level, narrowing down X, Y, and Z for all my particular invoices, not just my customers. And then one cool feature that we have too, and I kind of alluded to this earlier in the forecast, is because we have all that historical data, we're going to help predict when future invoices will be paid based off that customer's historical payment pattern. So again, that example, if I'm always 10 days late, you issue me an invoice due November 1st, we'll project that November 11th and help give you an expected date, which is also taken into consideration with that same type of impact view here. But when it comes to AR, the second pillar is automation. This is what's really going to help save time throughout your day, ensure that every single invoice is being touched proactively. And if there's any reason we're not going to get paid on time, we want to flush those issues out at day 1 through 5 in the process, rather than day 60 through 90, when we simply just didn't have time to touch that invoice because we had so many other tasks to do. And we were more focused on either the longest standing on invoices or the highest dollar value invoices. So you'll see here, each customer is going to be assigned to a Centime campaign, or you could think of these as like an AR automation workflow, where you can create as many different workflows that fit your folks' process. These are just three very basic examples of workflows, but you could have it broken out where you maybe have 20 different workflows and different customers are assigned to different workflows, because collections is not a one size fits all process. we need to ensure that each person we reach out to is getting the right messaging at the right point in time based on our relationship with them, and not just, hey, they're a customer, let's treat them all the same. So if I jump into the slow payers workflow, or again, this could be a mid-market enterprise, SMB, however you break out your customer base, where, and it's also not just every 7 days type of task here. If I want, the first communication going out 30 days before the due date for my slow paying customers with XYZ as the messaging that's going out at this point in time, I can fully customize this as the user myself. Very user friendly. The exact PDF that we've created in NetSuite would be attached to this email as well, so they'll always have access there. And then we're going to continue to touch this invoice 14 days before the due date, 7 days before the due date, on the due date. And then, as this invoice ages and we escalate, we might want to change our messaging. So you can completely configure who's getting what message at what point in time, but also having that insurance that as soon as you create an invoice, it's going to get followed up with in your ideal way without any actual effort needing to take place. And then we also alert you and your team exactly when you folks do need to step in through the process. So whether it's, hey, as soon as an email gets to, or as soon as an invoice gets to 20 days past due, ping me and my team to call the customer. Whatever the case is here, you can configure these internal notifications. So you're ensuring that automation is touching everything and then letting you know when you need to step in. And then the last piece of the puzzle here from the automation perspective is in the body of these emails, we can include a link that would bring your customers to a self-service portal where they could view all their open invoices, download them, so they can never really claim, hey, I lost it or I misplaced it, is they'll always have that link and that portal accessible to them to go back and view and download invoices. And then most importantly is actually make payments online via credit card or ACH, which would push back into NetSuite, close out the invoice, apply that cash toward that invoice, helping with the reconciliation as well from a what else can we help automate? And then you can also get super flexible with limiting your exposure to credit cards, such as, hey, anything over $10,000, no credit card, anything past the due date, no credit card. I want to pass the fee down to the customer. A lot of different flexibility we have here. And there's a tremendous amount of data shown that the shift to B2B payments being self-service and the true impact that it makes, not only from the customer experience, as you and I are kind of used to paying our utility bill, for example, online once we get reminded. It's just kind of how we're starting to be conditioned, and they don't need to pick up the phone and call your team anytime they want to make a payment, et cetera. So a combination of the automation, the online payments, and just the visibility here is proving to have a tremendous impact on reducing DSO and getting cash in the door much faster. And very similar to like we saw on AP, we're going to provide some really nice KPIs here on the AR side of things to, again, help you identify where the potential areas to make the biggest impact to our cash flow are going to live. So same type of approach, we can configure the time range to bring in portfolio level metrics such as CEI, DSO, days past due, et cetera. I can see what we've collected on time versus late, month over month, or quarter over quarter, how that's scaling. We want to see less purple and more green as time goes on. I can drill in there to see the payments that did come in on time versus late, et cetera. And then just as important as payable statistics by supplier are, I think receivables by customer is at that same level where I can jump in here and actually use data to drive my decision-making on the collection strategy. So maybe I take everyone that's on an average of 20 days past due and greater, put them on one workflow that's going to be much more proactive, setting them more reminders before the due date even, compared to my customers who looks like they've traditionally paid me pretty well, and I can be a little bit more hands-off with them. And then, as time goes on, see how folks have scaled quarter over quarter to see if the changes that we're making are creating an impact, and then maybe moving them to a medium touch workflow. And this impact percentage is a cool metric that we have here that basically helps identify the customers that we invoice at a high frequency, at a high dollar value, that also pay us late, that if we could move the needle 1 or 2 degrees here, our opportunity to accelerate cash flow is the greatest. So maybe we want to be super hands-on with these folks. Again, maybe we want to be more proactive, but just ultimately getting you the data very easily to help drive decision-making without all the manual spreadsheet manipulation typically going into something like this. And then while we're in the KPIs, I want to wrap up here on the cash flow KPIs, which kind of coming back to what BC had mentioned before, is the lifeblood. And we need to understand what's happened in the past to help decision making in the future. So I can, again, configure the time range here. We're bringing key KPIs like, cash flow, burn rate, runway. I can see, okay, the week or the month of May of this year, I'm in the last quarter time frame. We brought in 183K, or we brought in 160K, sent out 176. I could drill in to see where those inflows came from, where those outflows went. I can jump over to a statement view, very consistent to what we saw over in the forecasting module. Only difference is this is history. Forecasting is what we're anticipating to happen in the future. Again, this can be exported out if I want for further slicing and dicing. And then I think this is a very impactful view here, this cash flow by groups, where I can say, okay, we were negative 76K in cash flow last quarter. Where did majority of our cash come from? And again, this is where you can group those individual inflows, like our mid-markets, our SMBs, however you folks want to think about it. And where did majority of our cash go? Payroll is probably always going to be the biggest expense here, but we really spent $117,000 last year on marketing expenses. Like, prove that to me. Show me where those payments went to which vendors. So being able to have all this information at our fingertips, and then also have the ability to adjust our strategies from an inflow versus outflow perspective, all within the same system that we're also kind of getting that 13-week forecast in, is the grand vision here. So want to leave a little bit of time for questions if we do have any, Devin, and open it up and turn it back to you.
Hey, thanks, Griff. I think there was one question that I want to jump in right away. I think we've answered most of the questions that came up, but there was one that was about, do you support integration with Microsoft Dynamics 365? We don't currently. I think that's something that we'll be looking at in the future. Today we support, I think the purpose today was to just really focus on our NetSuite integration. And as Griff said, this is fully integrated with NetSuite. It's bi-directional synchronization. It's embedded within the NetSuite interface. You don't ever have to leave NetSuite. You use your existing NetSuite credentials to start using it.
Yeah, and I do just want to say too, I know a lot of people in the poll at the very beginning shared that they are QuickBooks users as well. And we also integrate with QuickBooks right now.
Yep.
So
Great
yeah,
question.
I think QuickBooks Online, QuickBooks Desktop, NetSuite. And since we're on the topic of what accounting systems we integrate with, let me make also a shameless plug for the fact that, we are in the final stages of completing our integration with Sage Intacct, which we'll have available middle of next month. And certainly open to, if you use a Sage Intacct and you want to be a beta customer, we call it the EAP program, please let us know. We'd love to chat with you.
Yep. And BC, do you want to touch maybe 1 minute briefly on that kind of sixth item being
yes.
access to credit?
Sorry, yes. Yeah, sorry. Yeah, so if you, I think what we want to do is to just go back into the credit, the cash module. And then what I'd like to do is to highlight the fact that we actually have incorporated into our solution working capital line of credit. As I said, we work very closely with banks. We are tied at the hip with a bank, which is a bank partner of ours called, the First National Bank of Omaha. And what you can do from within our product, actually, if you don't mind, just going to that, payment solutions section, Griff.
Oh, yes, payment solutions, yep.
So just go in here. So from within the product, what you can do is to apply for Centime Credit, which is basically a combination of a credit card and a credit line. It's two things rolled into one. It's a credit card and a credit line. The credit line is basically something that gives you 90 days of working capital for a very modest fee that's very fully included into the solution. We'll show you how that it can be used. So once you apply and you've been underwritten, then you can go into the cash module and then use that account-to-account transfer feature. You see that there's a section of the application that we call Centime Credit. And so you go in and you click on Centime Credit Line. You can say, I want to draw, right? So click on the button, You see that little interface that shows you what your cash flow looks like over the your cash forecast looks like over the next several weeks. And you say, I want to draw from my credit line, choose the account into which you want to move the money, choose the amount. Basically what we do is we drop cash into your bank account. You only pay for what you use. You can have up to 90 days to pay back. There's a lot more to get into in terms of terms and so on and so forth, but rest assured that it is extremely affordable.
Awesome.
Thanks, BC. Thanks, Griffin. Oh, and it looks like we have one more question around how to convince your company to buy automation tools and platforms when they're maybe not ready to spend the money. I am going to share in a link here. We have right now live an ROI calculator that is just for AR. And very soon, I think in the next few months, we'll be hosting a webinar specifically on helping you build your business case for AR, AP, cash flow management, and automation in general, and building that platforms into your business. So please feel free to reach out to us, marketing@centime.com, and we can follow up with you on helping you strategize of building that business case.
Yeah, and I think that that gets you to the very, very specifics of how the ROI and how you can justify a purchase in the context of your own business. And that's very quantitative and very appropriate and very necessary. But if I was to step back a level and talk about it more qualitatively, it really comes down to, four things, right? One is, generically, right? It helps really concretely helps save you money. 70%, 60 to 70% cost savings on AP speeds up things, right? Processing invoices, having the ability to, stretch your payables. These are things that are very, very concrete. Number three is controls. We've hardly touched on it today, but a lot of you, briefly, I mentioned the fact that we've got sort of the need to be able to prevent and protect yourself from fraud. A big part of preventing and protect yourself from fraud is to implement controls, and having consistent controls on the AP side, for example, or on the AR side is a critical piece of ensuring that you prevent, yourself from being a victim of fraud. And the fourth, very importantly, the strategic imperative is to connect all these pieces together so that you can impact your cash and working capital. Which brings us full circle to the point is that why do any of these things? There's no point doing it if it turns out that you don't have the ability to control your cash and cash flow. Cash is the lifeblood of the enterprise. Doing things like this really helps you control and manage your cash.
Completely agree.
But as Devin said, the ROI calculators get into the more specific elements of what it actually means in the context of your business.
Thanks, BC. I appreciate that. Well, BC, Griff, I think that is the last of questions that we have right now. So I appreciate your time for this webinar today. And I know Griff did a wonderful overview of a demo of Centime, but if you have more questions that are specific to your business specifically, I encourage you to check out centime.com/demo. If you book before next Tuesday, September 26th, you'll have access to shop from our Centime shop with an array of gifts. So please feel free to check that out. And again, thank you everyone for taking the time out of your Tuesday to join us today. And I hope you have a wonderful rest of your week.
Thanks so much.